But today I want to talk about something is a little different from what we normally talk about. And this is technical. Okay. This is talking about our bread and butter, and that's presentation of the financial statements.
I love bookkeeping.
Hi, it's Ben Robinson, and welcome to the I Love Bookkeeping show. Today I've got something very special to share with you. But before we get into that, I want to encourage you to go to ilovebookkeeping.com and check out all of the shows that we have. We have show notes. We've got all sorts of goodies that are on there. So please go to ilovebookkeeping.com. And if you're not subscribed to this podcast, why the heck not? Because it's a great way for you not to miss any episodes. So make sure that if you're on Apple, through iTunes, Android, Spotify. I mean, we're pretty much on every platform that has any kind of sound coming out of it. We are on. So make sure that you use whatever platform that you want and get access to all of these things, right? All of these episodes that we do. I guess they're not really things. But anyway, there I go ad-libbing. But today I want to talk about something is a little different from what we normally talk about. And this is technical. Okay. This is talking about our bread and butter, and that's presentation of the financial statements. Because I observe a lot of crap out there when it comes to financial statement preparation. I know that's not you, so I want you to focus in on this message though, because as we progress and as our industry is in such turmoil, the presentation of financial statements is going to become very important because it is going to become the baseline of everything that we do. Whereas before it was the ceiling, okay, it's kind of where we ended. Now that's going to be the floor. And above that, as we always talk about here, presentation of the financial statements is one thing, then interpreting them is another thing, and then advising on them is where we want to get. So I know that I've talked about advisory services a lot here, and that's not what we want to talk about. I want to talk about the presentation of the financial statements, okay? And I'm going to talk about some of the common elements that I see that are wrong in financial statements, and I want to talk about one of financial statements that's one of the most important. It's the big three that's never presented, and I bet you can guess exactly what that is. But let's talk about these financial statements. Obviously, when you present financial statements to your clients, it needs to be the balance sheet, the income statement, and the statement of cash flows. Yes, I said the statement of cash flows. If you don't understand that, don't worry. In a minute, I'll go through that in a little bit more detail. But here's the thing, right? We've got to present all three of these financial statements. And here's why. Let's say that you went to your doctor for your annual physical, right? And she drew blood, and there's 3 tests that she can run. Okay. And so she runs only 2 of those, and she comes back with the results and says, you know what? Everything looks pretty good. There's something on this that might not be, so good, but let's don't worry about that. There's a 3rd test that I could have done, but I'm not going to do it. How would you feel in that situation? I would say, what the heck are you talking about? I'm going to another doctor because I want that doctor to run all 3 tests. It's the same thing in financial statements. If we're only presenting the balance sheet and the income statement, we are leaving out one of the critical elements of these financial statements. It's why back in the 70s, I believe that it was, don't quote me on my accounting history, but it's why the statement of cash flows was generated. It's exactly why the powers that be, whoever that they are, the accounting czars said, hey, you know what? We're missing something here. We haven't created a new financial statement in hundreds of years, so let's go and do that. But they really didn't do it just for a job security. They did it because they realized that analyzing the cash flow, which is the lifeblood of a business, is something that was missing. So the first key takeaway from this is present that dang statement of cash flows. If you don't understand it, go and find out, right? There's tons of videos. We might even do a more of a deeper dive here in understanding a presentation of the statement of cash flows, right? But if you're not presenting that, that's your first action item, is to learn it and to start presenting it. Now, the second thing before we actually get into the individual statements is present the financial statements on the accrual basis. What did he just say? The accrual basis? Yeah, he said the accrual basis. Yeah, Ben, but my clients are on the cash basis for tax. So what? The tax professional, or you, can do what's called an accrual to cash conversion when it comes to presentation of the tax returns, right? This does not mean that your client is going to go on the accrual basis for income tax purposes. Now, let's keep this in mind. Cash and accrual basis over time, given all, perfect elements in a vacuum, static environment, they would be the exact same over the course of 10 years. Timing is the difference in accrual, but that timing is everything, right? Just ask anybody who's gotten pregnant before. Timing is everything. So one thing that we've got to do is that we've got to present these financial statements on the accrual basis. Now, if your clients give you, hesitation on that, again, it's going to be because they think that it's about income taxes, that they're going to have to present their taxes on accrual basis. That's not the case. So key takeaway number 1, present that statement of cash flows. Key takeaway number 2, present it on the accrual basis of accounting. Now, right now, you can get away with the cash basis. You can get away with the income tax basis. But as we start to progress and as we want to separate ourselves from bots, from chat things, from AI, whatever the case, we got to present these on the accrual basis. Okay, because I can totally manipulate, I can totally fool myself about the performance of my business when it comes to cash basis financial statements. I can make myself look really great. I can make myself look really bad, but accrual basis, it gives us a way in which we can't shirk out of that, right? We got to make sure that we're presenting it on the accrual basis. Now, balance sheet, okay? I'm not going to go through the X's and O's, but here's a challenge that I see, or here's something that I say is that people tell me, hey, Ben, this is the way that Quickbooks, I think I just heard a dog barking somewhere, but this is the way that Quickbooks presents it, right? The balance sheet is presented this way in Quickbooks, so they've got to know everything right. Look, Quickbooks is a software, right? It's not the solution. You are the solution, and you use the software as a tool. Just like a carpenter uses a nail gun, maybe he uses a rasp, maybe he uses something else, right? There's a lot of things in our bag, but just because right out of the box, the balance sheet or the income statement or the statement of cash flows is presented one way, doesn't mean that it's accurate, right? QuickBooks is doing their best, but it's up to us, it's up to you to customize them. Now, another very important thing that we want to do on the income statement is present it properly, okay? And that means that we do a multi-step income statement. Now, I know that a lot of you are going, yeah, duh, Ben, but let me just reiterate this, right? It starts with gross revenue, less allowances for, less refunds and allowances, which gets us to net revenue or net sales if you're using a different type of business. So the naming convention, the heading, everything that goes on there, very important. After net sales or net revenue, then we have direct costs. This is a big mistake. I see people put direct costs in all of the expenses. Most businesses have some sort of direct costs. When I was working with dentists, they had direct costs. That would be their hygienist's salary and payroll taxes. That would be their assistants. That would be their lab supplies, their lab. That would be their dental supplies. That would be their dental equipment. These are direct costs. And it's important that we separate these. And the reason that it's important is because as we start to do financial analysis, it's important that we distinguish between what is our direct costs and what is our indirect costs or our operating overhead. And so that brings us to the next thing, right? So we got net sales, net revenue, and then we've got gross profit, which takes away the direct costs or cost of goods sold, depending on the type of business. Then we have our expenses, right? Things that aren't directly affected by the revenue. So going back to my dentist example, rent, right? You could argue, well, that's the correct, no, it's an indirect expense, right? We got to make sure that that's shown down below, along with dues and subscriptions, office supplies, let's say here, office manager salary, things that aren't directly related to being down in the mouth, as a dentist would call it, would go down there. And then we have total indirect expenses, right, or total overhead. And then down below, we separate out interest expense, okay, depreciation and amortization. This is a no-brainer, right? But I see people just ball it all together in just one expense category, and that's wrong. Right? That is just plain wrong. Go read the rules of GAAP or IFRS. That's not the way that we are to present financial statements. And then finally, let's wrap up with the statement of cash flows, right? Got to use the statement of cash flows. We got to present this, right? We got to go through, hey, what is the operating income? Hopefully your business that you're working with has operating income. What is the operating cash flow that they have, right? Because the statement of cash flows goes through it from an operating, an investment, and a financial perspective. And really, the key metric for every single business, and I learned this from listening to Warren Buffett. You know, we were hanging out the other night at a bar. Just kidding. Sorry, Warren, if you're listening to this. I know that that's a total lie, but that would be really cool if you would invite me over. Anyway, when we are looking at the statement of cash flows, the most important metric that I say in any business is the cash flow from operating activities. Okay. Net income is important. Cash balance is important. But the lifeblood, what you value a business on, is the operating cash flow. Okay. What are they doing to generate a positive cash flow in the business? Because I can be generating cash, but I can be manipulating it through the investment and financial side of things. Okay. Now, I know that this is a very cursory look at the financial statements. So the big key takeaways: present that statement of cash flow, present them on the accrual basis, present them in a very pretty manner. But the most important thing that I haven't mentioned yet is present them and interpret them to your client. Don't just give them to your client. All right. Explain them to your client in a way that he or she understands, because everybody is different. We can't use jargon. We can't talk in, really high terms. We can't say, hey, I didn't roll retained earnings, which is a mistake that I made one time down the road. And the client was like, what are you talking about? It's like you're speaking German. So I want you to present these in a way that your client understands them. Okay. That is the I Love Bookkeeping episode for today. If you have subjects that you would like for us to cover, go to ilovebookkeeping.com, shoot us a line and let us know how we can help. I'm here to espouse on anything that I have expertise on. We're also trying to get some experts on here to share with you their opinions. And so if you know of somebody that would be a great guest for us to have on there, pop them in there. If that's you, I would love to interview you and have you on here if you have a compelling message for our profession. Again, go to ilovebookkeeping.com, check out all the episodes, make sure that you're subscribed. And until next time, thank you for being a great bookkeeping professional. Head on over to ilovebookkeeping.com. There, you're going to find all of the shows, the notes, and some other great goodies that we have for you there. Now, if you'd like to be a guest on the I Love Bookkeeping show, there is a link that says Be a Guest. Go in there, and we'll walk you through the process of getting on the show. And finally, to discover more about our programs, go to the courses page on the ilovebookkeeping.com site. There you have it, another great episode of I Love Bookkeeping. Thank you for being a proud listener, and thank you for being a bookkeeping professional. Enjoy the rest of your week.
I love bookkeeping. Here's a little shout to all my friends working hard at keeping the books. You want to change your life, you want to grow that biz, it's not as hard as it looks. Be a money guide, a profit coach, step up your game